Welcome to Explain the Charts, where we break down the news and chart data to help you make smarter trading decisions. Today, we're diving into Google, the stock for Google's parent company, Alphabet. Recent news surrounding Google has been positive, with strong third-quarter earnings reports exceeding analysts' expectations. Revenue increased by 15% year-over-year, reaching $88.27 billion, demonstrating Google's continued growth and dominance in the digital advertising market. Google's cloud division achieved a major milestone, surpassing $10 billion in quarterly revenue for the first time. The company's focus on artificial intelligence, AI, continues to drive innovation and growth. Google has made significant advancements in AI software that mimic human reasoning abilities, particularly in chain-of-thought prompting and the Gemini chatbot. The company's software development process is increasingly reliant on AI, with over 25% of Google software now written by AI. This demonstrates Google's commitment to AI and its potential to disrupt various industries. However, there are also concerns about the potential impact of Donald Trump's victory in the 2024 presidential election on tech stocks. Some analysts believe that NVIDIA, a key player in the AI chip market, faces unanswered questions heading into its new fiscal year. Despite the positive outlook for technology stocks during a second term for Trump, highlighted by rallies in Microsoft and Amazon.com shares, Google's stock has been relatively flat in recent weeks. This suggests that investors are still cautious about the potential impact of the political landscape on Google's future prospects. Let's take a closer look at the chart data and see if we can identify any trends, reversals, or support and resistance levels that might shed light on Google's future price movement. If we look at the daily chart of Google, we can see a clear uptrend over the past few months. The stock has broken through several resistance levels, indicating strong buying pressure. However, the recent consolidation phase suggests that investors are taking a breather before potentially pushing prices higher. The stock is currently trading above its 21-, 50-, and 200-day moving averages, a bullish signal. The relative strength rating of 70 also indicates positive momentum in the stock. Looking at the daily candles, we can identify some key price levels to watch. The recent high of $141.11 could act as a strong resistance level in the short term. The 200-day moving average, currently around $130, could serve as a support level. If the stock breaks above $141.11, it could indicate a further surge in price. However, a break below $130 could signal a shift in sentiment towards bearishness. The volume profile on the daily chart shows increased volume during the recent consolidation phase, suggesting that investors are actively participating in the market. This could be a sign of upcoming volatility. Let's now zoom into the 1-hour chart and see if we can identify any short-term trends or patterns. Switching to the 1-hour chart, we can see some interesting price action. The stock has been consolidating around $169 for the past few days. The recent volatility suggests that investors are trying to find a direction for the stock. The 1-hour candles show a range of highs and lows, but the overall trend remains slightly bullish. The stock has been testing the $170 level multiple times, but hasn't been able to break through it convincingly. This could indicate a potential resistance level. The volume on the 1-hour chart is relatively low, suggesting that the market is not very active right now. This could also be a sign of consolidation. Let's zoom into the 15-minute chart and see if we can identify any more specific trading opportunities. On the 15-minute chart, we can see some more detailed price action. The stock has been moving in a narrow range, oscillating between $170 and $171. The volume is relatively low on the 15-minute chart, indicating that the market is quiet. The recent price action suggests that investors are cautious and waiting for a clear signal before taking a large position. This could be an opportunity for day traders to take advantage of short-term price fluctuations. The 15-minute candles show that the stock is currently trading near its recent high, which could act as a resistance level. However, the recent support level around $169 could be a good entry point for those looking to buy on a dip. Overall, The short-term chart shows a relatively balanced picture. The stock is not showing any strong bullish or bearish signals, and the volume is low. This suggests that the market is waiting for a catalyst to break the current consolidation phase. We need to keep an eye on the news and events that could impact the stock's price movement. In conclusion, Google's stock price is currently in a consolidation phase, reflecting the uncertain political climate and investors' cautious approach. The daily chart shows a clear uptrend, but the recent consolidation suggests a potential breather before a further push higher. Key price levels to watch on the daily chart are the recent high of $141.11, which could act as resistance, and the 200-day moving average around $130, which could provide support. The 1-hour chart shows a relatively flat trend with the stock testing the $170 level multiple times without a convincing breakthrough. The 15-minute chart displays a narrow range of price movement, suggesting that investors are waiting for a clear signal before taking a large position. Short-term opportunities for day traders exist within the current range, but the market is generally quiet. The volume profile on the daily chart indicates potential volatility, making it crucial to monitor news and events that could impact the stock's price movement. If Google releases positive earnings reports or announces major AI advancements, it could trigger a bullish breakout. However, if the political landscape becomes more challenging for tech stocks, Google's price could face downward pressure. Remember, trading involves risks, and it's essential to conduct thorough research and consult with a financial advisor before making any investment decisions.